Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Get ready to find out if this company is a privacy champion or a data-hungry monster. But seriously, is it worth your investment? Today, we're diving into Privacy and Value Incorporated's Form 10-K, their yearly financial report. This document is like a company's annual health checkup, revealing everything from their business model to their biggest worries. We will explain it to you like the company's annual health checkup, revealing everything from their business model to their biggest worries. We will explain it to you like the company's annual health checkup, revealing everything from their business model to their biggest worries. We will explain it to you like the company's annual health checkup, revealing everything from their business model to their biggest worries. We will explain it to you like the company is talking to a regular person like you, telling you if they are doing good or bad, and, most importantly, if they are worth your investment. Before we start, if you appreciate getting straight insights from these corporate filings, make sure you're subscribed. We also have a Discord community linked in the description below. First off, this is an annual report, so it will show the company Privacy and Value Inc. for the year starting in August of 2023, all the way to July of 2024. Privacy and Value Incorporated is a small company, and when we say that, we really mean small. They're based out of Wyoming, but actually have an office in Kenya and are focused on developing employee monitoring software. The idea is to balance a company's need to keep track of its employees with the employees' right to privacy. Their stock isn't traded on the big exchanges like the New York Stock Exchange or NASDAQ. It's common stock with a tiny par value of less than a penny per share. It's not a shell company that is a company that exists on paper only without active business operations or significant assets. It's also considered a smaller reporting company and an emerging growth company. This can give it certain breaks when it comes to following all the rules and can skip on some audits and report less. The market value of their stock held by non-affiliates, so basically the value of all the shares not owned by insiders, is only about $23,000. This underscores just how small Privacy and Value Inc. really is. They have a little over 2,000 million shares of common stock. They are using forward-looking statements. These are like making educated guesses about the future. Because they are using them, if things do not go according to plan, they cannot be held responsible, unless of course they are lying. So what do? What is the story with Privacy and Value's business now? The company is developing software to monitor employees called Privacy and Value. Their main goal is to balance what employers want, which is a good and efficient employee, versus the privacy of those employees. So as more and more people are working from their home and other countries, companies are worried if they are actually working. Some of these companies have been caught snooping a little too much on their employee, and that is where Privacy and Value steps in. The plan is that the software will only monitors when an employee is on the clock and signed into the system. The software will keep track of time and breaks, allowing managers to compare how different employees are doing by counting keystrokes and time on the computer. With those values, employers can determine if people are working efficiently. A company called Cyber Apps World planned to buy half of Privacy and Value, paying some money up front and then more later based on how much the software was worth. Somebody came in and did a valuation which estimated the software at being around $2.2 million. Cyber Apps was supposed to pay $250,000 because they already paid $10,000. However, that deal fell through. In May of 2023, Limitless Projects decided to cancel that with Cyber Apps. So currently, Privacy and Value is 100% fully owned by Limitless Projects Inc. Since the revenue is less than $1 billion, that makes them an emerging growth company, meaning they get some breaks from certain rules and regulations, and since they qualify, this means they can skip a Sarbanes-Oxley Act of 2002. The employee monitoring software market is pretty crowded. There are bigger, well-known competitors and also smaller companies that do this, but are smaller and mostly target very small companies. That might not be a big problem for Privacy and Value, but it exists and can impact future growth. To stand out and go against the companies such as ActiveTrack and Time Doctor, Privacy and Value want to focus protecting employee privacy. The company has to follow several rules and guidelines on things like protecting consumers and their data, making sure data is correct, keeping online security tight, and protecting employee information. There is the European Union's rule about keeping online information safe and others. Even though the company is not based in the EU, it still concerns the company since it could impact how to design a safe software for other companies to use in the EU. There are also things like the California Consumer Privacy Act called the CCPA, which is a law that helps give people more control over their personal information that businesses collect about them. Under CCPA, there is a chance that the company will have to consumer class actions with statutory damages of up to $750 per violation. This is extremely bad since that amount can quickly lead to millions of dollars in penalties and losses. The United States says that companies can monitor everything as long as they have a good reason. The company does not have any intellectual property on their privacy and value software, meaning that people can copy their software and the business is at risk. As of right now, they don't have any employees, just outside contractors working on the software's development. They have not spent any money on research or development since they started, said the filing. As of October of 2024, they have 38 common stock owners on record. Let's cut to what everyone cares about, the money side of things. In a year, they lost about $14,563. The company has not made profit and relies on loans to push their business plan forward for these reasons. The auditors see as there's a big uncertainty about whether the company will keep going. As of July of 2024, they had $10,000, but over $400,000 in liabilities or debt. Cash from what they do, the daily operation, ended up being about $24,000. After accounting for the money they lost to pay for accounts, investing activities, so they have invested for office equipment and software related, led to $24,000. This is compared to the almost $8,000 of 2023. They are using accounting principles generally accepted in the United States of America. There are off-balance sheet arrangements at their company, so they do not have any hidden liabilities to be worried about. They are using accelerated methods on their property equipment and are depreciating this by 5 years. If they do not think that they are able to get those back, they must establish a valuation allowance. Their loss per share is 0 since they are extremely small. There is the opinion on the financial statement by the accounting firm that the financial statements present fairly in all material respects. However, that there is going concern that privacy and value might will go out of business. However, that this can impact the outcome out of this analysis. Their audit matters is very subjective since it is extremely challenging. Let's look at their balance sheet real fast at July 31, 2024 versus 2023. Their cash positions are $0. Their current assets or cash they had was around $10,000. Fixed asset for both office equipment and software were around $146,000 more or less. Their accounts payable or debts are over $400,000. Overall, they have a negative of close to $300,000. Looking at the statement of compressive loss, expenses were mainly with some general expenses for over $14,000. This means the net loss or total loss ended up being roughly $15,000 for this year. Weighted average shares are around 2,000. The statement of stockholders' equity. In 2022, there was negative $179,000. Now let's look at the cash flow. Fixed asset depreciation around $1,000, ending with no cash run, no supplemental cash flows for this year. Daniel Okello plays all the major roles at the company as president, CEO, CFO, and even a director. This executive compensation table displays compensation awarded, earned by or paid to named executive officers. Daniel Okello was not paid anything in both 2024 and 2023. Daniel Okello has around 50% of the shares of the company with 100 million shares overall. They did has relate transaction with Daniel selling 100 million shares at the very cheap price of $0.000. What do we take away from privacy and value? Well, they are trying to make a privacy-based software, but they have to compete against companies that have a huge head start over them. Internally, they have some major issues, such as not have audit committee or people that are financially knowledgeable internally. This all leads to having concerns by management about the financial and internal control. Tax financially with their money, they have little to no revenue, a lot of debt to pay as they accumulate to $400,000. A lot to take into account with these numbers. They are small, they are trying. But the business idea is interesting, however they have an uphill battle in a very huge market. With great issues internally, it's not so good for investors until they have better results later on. Alright, that's our breakdown of Privacy and Value's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description below. Thanks for watching. See you next time.